Yeah, my computer is always slow, like when we get started. I think it's just like that when people are entering.
Yeah, I think so too.
Yeah, it's gotta let it
Yeah,
let people get in.
exactly.
I'll get a couple more. See this. Give it a couple more minutes. Got a couple entries.
See how that. Let's see what's the cause looking like. Excuse me. Yeah, everything is retracing.
These things. I gotta give it some time. It's freezing up a bit. And I can't even click on this. No, I think I'm gonna have to just reinstall Zoom. I'll do it later though, but I think that might be the issue. Like these issues only came up once we had that update.
Exactly.
And how far is EC? Oh, it's not that far. I mean, it looks like it's super far, but it's only like 20, 25 pips. It's not too bad.
Not too bad. And the pair moves fast, so it should get to probably our London session.
Exactly. Or it might even swing up before that. That's kind of what I like about Asia session, because it's like the perfect time to set up trades, you know, because we enter like around like 6-8, and then once London hits, like straight to TP.
Exactly.
Yeah, I'm just gonna let it be. I mean, if it closes below, then I'll probably just, cancel this. But I mean, until then, we could wait on it. Man, this thing is so slow, bro. All right, cool. Let's see what else. All right, I think everyone's kind of here for now. Hey guys, how's it going? If you guys have any questions, feel free to put them in the chat. If you guys want me to look at anything or explain anything specific, and then we can go over that. Otherwise, we're just going to look around for trades right now. See if there's any entries that we could enter before London session so we can catch that momentum. Let's check it out. Yeah, it's a little slow. I was thinking about entering this one, this odd CAD. Like no, for sell, but it was like the candle closed like right on support, so I was waiting for it to close below support.
Oh yeah, okay.
To enter, but it doesn't look like it's happening anytime soon. Let's see how far is this? Yeah, I'll probably hang out on that. Our odd THF position is still active. Not cleared. It's not yet. Said I was going to cancel it if this candle closes within the zone, because then at that point it's going to be stuck within the zone. But if it pulls up, then we'll let it run. This candle still has 56 minutes left, so it's got some time. But we'll go back and check that later. Odd CHF position is still active. Looks like it's still going to come down. There's no support really anywhere nearby, but it did pull back a little bit. So you guys might have gotten stopped out of this. It looks like it pulled down enough to reach, yeah, nearly 60, a little over 60 pips. So if you guys had your target at TP1, TP1 is 50 pips, so a lot of you guys got out at that target. But yeah, we'll see if it comes back down. We also have an odd JPY position still active. This one came really close to full TP for 100 pips. But yeah, this thing's running so slow. Go back over here. So this thing dropped about 92 pips. So I was literally 8 pips away from full TP. Looks like it's still coming down. So if you guys still have this active, then you guys should be all right. Otherwise, I think a lot of people got out at TP1, which was around here, 50 pips. But if you're still in it, it still looks fine. Just make sure to keep your stop loss and profit just in case it ends up reversing. Jackson says GJ still valid for a sell stop. Yeah, are you in that position, Jackson? I got out because I moved my stop loss and profit. So let's see. So if we zoom in on this, you can see that price dropped. It dropped about 13 pips. So generally what I have on the signals is once it reaches 10 pips, I move my stop loss either in profit or to break even. And I moved it slightly in profit just to cover commission and spread. So I got out with a slight profit. I did have a sell stop here to catch that momentum back down if it does swing back down. But if you do have a sell stop there, it still looks fine because it's right here rejecting off this this zone. So what might happen here is price might shoot down from there, just like how I drew an arrow there already. So if it drops down from here, it'll fill your sell stop, and then you can catch that momentum straight down. So if you guys still have that active, I think it's still fine. I know it's had some heavy drawdown, but I mean that's what you guys expect trading the 4 hour, because this candle has to fill, to some extent. It has to retrace. Like you guys can see right here, that's sort of what happened over here. We had a big candle, then it retraced up a little bit, but then it ended up shooting straight down. So that's kind of what I expect seeing here as well. You can see the same thing happen here. Price came up, tested this zone, this green zone and this red zone, until it charged up and then shot straight down. So that's probably what's going to happen here. So if you guys do have that active, I wouldn't be too worried. You can see from the candles, the top wicks are demonstrating some weakness from the bulls. So you should probably expect that to come down at some point, probably by London. We do have some high impact London news at 22, so that's about 10 o'clock. We have about 5 hours. So I mean, if it gets to that point and it's still pushing up, then yeah, you should cancel your sell stop. Otherwise, I think you should be fine for now. See what else we got. Curtis said to leave GJ alone. Yeah, I mean, it's going to be stuck in this area for a while because it doesn't really move too much during Asia. It moves a decent amount, but not enough to really. How many pips is this? So current price is right here. It's about 50 pips. I mean, it is a lot, but it's possible to move down, pretty close by. So we do have news. Actually, if price is still up here by the time news hits, you could probably just leave it there because that might be helping in your favor to push it back down. So if we do end up, well, I mean, we wouldn't be canceling because it's already been filled. But if you want to ask me later, I can check on it a little later. Okay, cool. Yeah, you still have the pending order, so you should be fine. I'll just hang on to that for a bit. Let's see what else we got here. CT said to check out AU, so let's pull up AU. I was thinking about entering AU, actually. We still have our active position from yesterday. It did hit CP1, I think. I believe so. So let's see. So it's dropped down to, yeah, nearly 85 pips down here. Or, yeah, around 80 to 85 pips. Our TP1 is at 50 pips, so it hit this morning or last night. Yeah, it looks like it hit last night. So I think I know a lot of people had their exit at TP1 and they exited with 50 pips. But if you're still in it, it looks like it should still be coming down. It's just stuck in a heavily zoned area right here. So it might reject off this zone. Let me get the arrow. Yeah, it might reject off this zone. It might test this zone and then come back down. So if I zoom out, let's see. Yeah, I mean, it can go both ways. So if you are still in this position, I recommend you move your stop loss and profit I mean, it's still pretty deep in profit, so you could at least move your stop loss to like 25 pips. That's not bad. If you get stopped out 25 pips, I mean, I'd still take that. But if you zoom out, it looks like it might have established a high right here, so it might be reversing back down. But it's in a consolidation phase. It looks like, so it can go up or down. Let me check the overall technicals for COD USD. They're running so slow. I have to figure this out. Technicals. Yeah, so if you look at the 4-hour and the daily, it still has an overall sell. Let's see the 1 hour. Yeah, it looks like an overall sell for the 1 hour, 4-hour, and daily. So I think we should be fine for the most part. So if you do have a sell for AU, I think it's definitely going to come back down. It's just going to retest this this upper zone right here and it might come back down. I mean, I'd get worried if it pulls up way up here and, you know, creates a new high. But like I said, I do recommend that if you are still in this trade to move your stop loss and profit, possibly around 25 pips, just to lock in a decent amount of profit, because it's still got a long way down. So if you pull it down from entry, it's 40 pips from entry. So, I mean, there's a lot of cushion right there. But yeah, let me go back to the chat, see what else we got here. Curtis said it better shoot down. Yeah, me too. Trying to re-enter that. DJ can enter down. Let's see. Do you want this to can you show how you would take partial profit after hitting TP1? Yeah, sure. So let me this is what I did with Aaron earlier. I'm just gonna take a very small position size. So you can see here, I'm gonna take this on my live account. So hopefully this doesn't screw up. But let's see. I'm gonna pick a different pair that's not in a zone, so that let's see. I'm just gonna take a random pair. Let's see, because I'm trading this with live money, so that's why I'm cautious. I'm not gonna do this on demo. I just need to find something to scalp a pip or two. So I think this might come down a little bit. Oh, fuck, the spread's 11 pips though. Fuck. Okay, I gotta find something that's volatile and doesn't have a wide spread. See what I can find here. Jesus, 11 pips for that? That's crazy. 8 pips? Man, what's going on right now?
The spread is crazy right now.
They're crazy. You know, I'll do this, but I'll do it on demo. So let me log out of my account real quick. I don't feel comfortable using my real account. Like, even though this is my small account, I still don't want to lose any money. So let me log out of this. All right, and then we'll go to paper trading. Yeah, no problem, D. I got you. All right, cool. So this is the paper trade account. Let's go to a random. I'm gonna go to a pair that's kind of moving fast. I'll go to GA. The spread's like 10 pips. I mean, because I kind of want to do this a little quick. I don't want to get stuck in the trade. I mean, it wouldn't really matter because I'm on demo right now. But let's see. Okay, cool. So this looks fine because there's a lot of space right here. Not a lot of room for manipulation right now. Spread's only 1.8. All right, cool. So let me just see where it's moving. It's not really moving anywhere. So it looks like it might be moving up because it rejected off this zone. So I'm scanning our buy. Here's an example for, so it's in our standard lot, so you can see. And I'm entering this market. All right, so right here we have an active position. And in order to sell off half of your position, you're gonna have to have an opposite order to sell off half of it. So let me, I'll set the trade right here. So I'm just gonna put a random sell right here, about a few pips away. I'm gonna use a sell limit order. And then see here we have 100,000 units. This is a standard lot, it's a 1.0. If you wanna sell off half of that, then you're gonna sell off half, obviously, which is 50,000. So you're gonna change quantity to 50,000, and it's gonna be placed right here. There you go. You can't really see it very well on this. Let me go on the smaller time frame. All right, cool. So you can see right here, I have a sell limit for 50,000. My full position is 100,000. So once price comes and triggers this, it's gonna drop in half. So let me just move I'll just move it down. I'll take a loss because regardless, this is demo, so it's not a big deal. Okay, cool. So price is right there. Once price comes up, it's gonna trigger my order. Looks like it's only a pip away. So as soon as it pushes up, zoom in on this. Yeah, this thing's playing around. Literally when I entered it, it pulled back. So let's give it a couple seconds. It should fill. Now I'll just keep moving it down. So. Let's see. So the bid ask is 1.8. Why isn't it triggering? Oh wait, 588. Move it up a little bit. It's gonna put it at there. Like what we're trying to do here is we're just trying to get this sell limit triggered, so you guys can see that it sells off half of the position. Just waiting for it to trigger. I don't know why it's not triggering. Like I know it has to cover the spread, but I mean, it should have by now. Let me pull it lower. This is literally not triggering our order. I don't understand why it's not triggering it. I don't know if it's because of demo or oh my gosh. All right, sorry guys. Let me go to a different pair. This pair sucks. That's so weird. Oh, it doesn't work on demo, but if you wanted to do it in real life, it'll be glad it'll be glad to stop you out and take your money, but it won't do it in demo. Okay, whatever. Let's do it again. So right here, we'll enter a sell. Same thing, standard lot. All right, cool. So, crap, I have to cover the spread now. Okay, so it's going to come down. Our entry on this, it's going to come down anyways. So I'm going to enter a buy limit. Since it's below the entry, I'm going to sell off half the position, which is going to be 50,000. Or in other words, it'll be a 0.50. All right, and this has to come down. Okay, so let me give it some time. But yeah, pretty much this is how you would set up if you're trying to close off half of your order ID. But let me, I swear, it's like it knows what I'm doing. Whenever I try to enter it, it goes the opposite way. Okay, come on. You know, we'll try a stop up here. 50K. All right, so we have a buy stop up here. All right, so we got the buy stop right there. So if you wanted to sell off half of your position in this area or close out half of your position, let's see price move that direction. Wow. Literally every pair is trying to play with us. I'm just trying to show this demonstration. See, CC said to put a stop above 50. Oh, here we go. It's dropping down. Okay, come on. Come on, let's trigger the order. There we go. Okay. It's super close. All right, I'm gonna move the buy stop down here. Just if it goes the opposite direction, you know, we'll just stop that in that. Okay, it needs to cover the spread. That's why. So it's reached our limit. It just needs to push a little farther, 8.8 pips for it to cover the spread. So let me just gonna move the buy stop down here. Wow, this is crazy. It's like I'm literally trying to get stopped out, but it's not trying to stop me out or hit my target. It's never happened. So let me just move my limit up a little bit if I can. All right, it's got to get triggered now. There we go. All right. It gets so close and it just pulls back. All right, I'm just going to leave it alone. Okay. Anyways, I'll just show you an example. I'll show you an example. So if you're trying to put a, so say if you wanted to put you target at TP1. So say if we enter right here, yeah, so say if you wanted to enter right here, and then your TP1 was, say, right here, 50% down. So you would put your TP1 right there. But the problem with this is that you'd have to monitor it because they're not attached to your original trade. So the problem with this is that if you leave it unmonitored, it's going to refill your order once it gets to that point. But so our full position is 100,000. So we're going to put a 50,000, half of it at TP1, and then you'll have the other 50,000 at TP2. So this is how you would exit at two separate locations. Sorry, it would be a buy because it's opposite. Yeah, so pretty much this is how you would set it up. But you'd have to monitor it because the thing is, if you have another stop loss up here, it'll stop you out and close your position. And then if it comes back down, it'll fill you in for another buy. So let me see if I could at least show you how it looks like when it closes out half the position. I mean, this is crazy. I've never witnessed this where I can't hit target or get stopped out. Usually price will hit you one way or the other, but especially GA, because GA moves really fast. So, I mean, this is really unusual to me. Okay, so let me just try to close. I just want to show you like a visual example so you can see. Okay, it's pulling back. See if I can move it closer. So it's currently at, there we go. All right, D. So if you saw that, our full position was 100,000. It was a standard lot, a 1.0. Now it's at 50. So it closed out half of my position there. So pretty much if price went down here, it would have closed out half your position down here as well. So since you had a full position of 50, once you hit target 2 or wherever you place the other exit order, then once you hit another 50, this will turn to 0. So let me put another order over here, just so you can see that once you close out all your positions, or once you have your other half closed out, then it basically automatically closes out your entire position. So let me I'm trying to move it close enough. Okay, so you can see there, if you saw that, D, now we have no active positions because we close out half of the position and then it closed out another one right there. So as you can see right there, there's no more positions that are active, and that's how you close out half of your position and have another half still running. Is D still here? Let's see if she. Okay, perfect. Yeah, I know it's a little complicated, just thinking about it, but if you actually see how it's done, it's actually pretty simple. All right, cool. So let me go down the list again, see if there's anything else here. Jackson said, I messed up my setting my alerts. How do I delete them? Yeah, hey Jackson, so we'll go to alerts right here. You'll go to manage alerts up here. So you'll look for your for the alert that you set up. And then say if it was like something like this, you'll just go here, click the delete button, and then delete it. And then you can go ahead and fill out another one. And I got a lot of alerts here that I haven't deleted. But yeah, it's pretty simple. I'll tell you to delete it. You just go to your manage alerts and then take them off. Let's see. Are there any other questions? I don't think there's anything else in the chat. So until we get any other questions, I'm just going to look at the chart for any entries. But if you guys have anything that you guys want us to look at, feel free to let me know, and then we can take a look. So let's go back to the 4 hour. I know you guys have noticed I've been trading on the 4 hour. The reason for that is because there's a lot of noise on shorter time frames, and we just haven't seen any, any moves worth taking on the 30-minute, which is how we normally trade. I'll look at my alert list. Yeah, as you can see here, we don't really have very many valid alerts. We do have this UC that happened earlier. Let's see what it was. So we did have a valid entry right here, which we could have taken. But let me see why we didn't take it. Let me measure this. Yeah, it was too close to the next resistance. It's only 10 pips away. So it's a bit of an issue because price might come up and reject off that. So that's why we didn't take that. We got a bunch of alerts right now. So all right, I'm gonna give it some time.
GU is valid.
Yeah, I know. That's fine. Let me pull it up. So yeah, we have a GU trade right here. Let me see. So it doesn't look like there's any nearby support anywhere soon. Hey, Aaron, can you, someone asked a question in the premium. I think it was Jake who said.
I got it.
So let me look if there's any support nearby. So there's no support on the 30-minute. We'll look at the 1 hour. There's no support nearby on there. I'm gonna change this to just normal resistance. There we go. Yeah, so we wouldn't take this trade because there's prices exactly at support right now. So if I go down, I'll just mark this here so we can see. As you guys look at the chart on the 1 hour, there's a green line right here. And this green line is indicating that this is a support zone. So I'm gonna put a line there just so I can see where it's at. I'm gonna go back on the 30-minute where we got the signal and see right here, price is exactly on support. So the problem with that is if we enter this trade, odds are price is probably gonna reject off that support and shoot upwards. So in this situation, we wouldn't take this trade. If we were to take this trade, I'd probably wait for it to at least break below the support. As you can see right here, we had another sell signal right here, but it was too close to, I mean, it was pretty close. It wasn't too close, but it was pretty close to the support. So if this same situation happened right here, I'd wait for, a bearish candle to close below the support like it did right here. And then I would have entered this trade. And as you can see right here, it went straight to profit, 49 pips. So even though you get a sell signal, I mean, that doesn't mean that you should be entering exactly then if it's near support. Also, you don't have to enter, exactly at that time. You can see right here, we got another sell signal. It was above support. It was really close to it. So we probably would have entered on this candle right here. And if we did that, I'd zoom out. And then I'd place a sell order, that candle. And as you can see right here, eventually it hit TP. So if you guys are familiar with the K2 strategy, I mean, obviously this wouldn't be a valid entry. I was just using this as an example. But I'll go ahead and basically run it down right here because I know there's some people in here that aren't in premium, so you guys aren't familiar with it. But it's real simple. I'm just going to break it down real quick so I don't waste too much time on this. Change this color. K2. So 1, K2 signal present. 2, K2 trend leader matches signal. And 3, price not within, I think it was 10-15. So 10 to 15 pips from K2SR. K2SR is just short for K2 support and resistance. This is from the K2SR indicator. So basically what the K2SR indicator does is it plots, the nearest support resistance on the chart for you. So as you can see here, if you go back to previous data, you'll see like these lines, these horizontal lines. If you guys take off the indicator, it'll be blank like that. So as you can see, you won't really know what support resistance is unless you go ahead and plot it yourself. But if you guys are using the K2SR indicator, it does everything for you. So it makes things a lot more efficient. So if you guys are looking for trades, you're able to identify where support resistance is and you're able to enter right away. And it helps also if you're using it with the K2 indicator, which is the momentum indicator. Basically, if you see a rejection, you got a sell signal, you take a sell. You have a rejection on a support, you get a buy signal, you could buy. You made a ton of money on both of these trades right here. Could have made 100, 200 pips. Again, right here, if you took this buy, could have made, nearly 80 pips off that. Again, right here, there's a sell. You're taking that. Another 80 pips, 60 to 80 pips if you roll it all the way down. But yeah, it's a brief explanation as to, the indicators. So we'll go back to the strategy. So make it smaller. Yeah, so for one, you just want to make sure there's a K2 signal present. We have a signal right here. This is a red signal indicating momentum swing downwards. Next, you want to make sure that the K2 trend meter matches the signal. So down here, the trend meter, I haven't explained the trend meter. So the trend meter down here gives you the overall trend on 4 different time frames. So if you go to settings, you'll have the option here to pick 4 different time frames. I have it set to intraday settings, so it's 30-minute, 1 hour, 2 hour, and 4 hour, because I want to see what the trend is on all these time frames. And if they all line up, then the bottom here will turn red if it's a downtrend. If it's trending up, it'll be green like this as an uptrend. As you can see here, clear uptrend. And it makes things easier on you. That's the whole point of these indicators. They make things a whole lot easier. So in this situation, you don't have to go and draw channels or trend lines because you already have the green bar down here. You guys know it's trending upwards. Same with the support and resistance. If you guys didn't have these lines here, you guys would be plotting, support and resistance in random areas. Like, how would you know that, this was the support, or how would you know that this was the resistance? It'd kind of be plotted in random places. But if you guys have the indicator, it does everything for you. See, like this wasn't even, well, it was a resistance, but it didn't get created until it was out here because it tested it a second time. But down here, like this isn't even a support. I kind of just threw this there. But as you can see, support resistance is plotted for you. Okay, so let's go back to my explanation. So our first requirement was met. Where there was a K2 signal present, we had a sell signal. Next, the trend meter here is showing a heavy downtrend. So since they're both red, they're both indicating a sell. This gives you a valid sell entry. Lastly, you just want to make sure that price isn't within 10 to 15 pips from the K2 support resistance. As we discussed earlier in the 1 hour, this is where the support is. So it's literally on support, and it's not more than 10 to 15 pips. So since not all 3 requirements are met, we wouldn't be taking this trade. And that's why I'm not taking this one. I'll go ahead and show you guys, a valid example just so you guys can see, what's valid and what's not. So let me go to a pair that had an entry, I think odd CH. Actually, I'm gonna look at a pair that we don't have marking on right now, so it doesn't confuse you guys. Hassan, yeah, you need premium access to access the indicator. It's only available to premium members. So let's go look at CAD JPY. All right, so right here, we got a sell signal. I'll go back to, let's see. Oh, price was too close. Let me go to another pair. I'm just gonna try to find a pair where I can show you guys an example where where all requirements are met. Support was right there. So let's see if there was anything right here. This like price might be too close. Yeah, it's too close. We would have skipped that one. So what else we got here? Here, JPY. It's kind of going to be hard to find valid entries right now because current market conditions. It makes it a little difficult for you to find an overall trend, and not only that, it can be hard for you to find one where there isn't too much support resistance because price is so poppy right now that it's creating so many support resistances around the chart. So generally, I'm going to try to find an area where support resistance isn't always in the way. So if we go right here, actually, Of March 31st. I'm trying to go to a time when there was no when the coronavirus wasn't going on, because due to the coronavirus, what was this called? So we'll go back to like earlier in the year when price wasn't so choppy. I mean, it was still choppy in February, so we might have to go back to all right, so right here, price wasn't choppy, it was trending pretty heavily. So you go right here. Yeah, see in this situation, there was a lot of support and resistance in this area, but once it broke that zone, went into the open. Yeah, like right here. So if we got an entry somewhere over here, then you'd be able to take an entry because there's no support resistance indicating that price might be rejecting from this area. The reason why we pay attention to support resistance is because there are areas where price is likely to reject. As you can see here, price came down, rejected, 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 came up, rejected off this resistance, came down. So the problem is if you enter a trade in the middle of these zones, odds are your trade might reverse on you. Like even though there was a heavy downtrend right here, price still went up. And you don't want to be caught in those situations where you'll get caught in trade and then you'll end up getting trapped. So let me see if I could find an area here where price wasn't crazy choppy. Okay, so this is perfect over here actually. Let's see if this was a valid entry. Yeah, this is perfect right here. Okay, so I'll use this as an example. I'm just gonna lessen the length of the support resistance so we can get in the way. So I'll go ahead and put the requirements up here again. K2 trading strategy 1, signal present, 2, K2 trading curve match signal, 3, price not within 15 pips from K2SR. All right, so it's real simple requirements. I mean, you guys just need a, they're pretty strict requirements. If these don't meet, then there's no trade. But if it meets, then obviously there's a trade there. So yeah, right here we have a sell signal. So we'll go back. Aaron, can you check the premium? I think Kem's asking about EG. I don't think I'd take EG because I'm not even looking at it, but I'm pretty sure it's close to support resistance. But if you can double check that.
All right.
Never
Well,
mind.
He just said never.
Yeah.
He just said never
I
mind.
figured. I think he saw that it was too close to support resistance.
Mhm.
All right, cool. So right here, we have a K2 signal present. We have a sell signal. Next, you want to make sure that the K2 trend meter matches the signal. Down here, the trend meter is red, indicating that price is in an overall downtrend. So in this situation, we'd only be taking sell entries. Next, you just want to make sure that price isn't within 10 to 15 pips from the K2SR. I put S2. K2SR. And just, as you can see right here, that there's no support anywhere nearby. So there's 15 pips right there. This gives you the green light to enter a sell position. And it's real simple. Once you have this valid entry, you're just going to zoom out of the chart. You're going to use the short tool. This is going to set your TP and stop loss. And then you're going to enter on the open of the falling candle. I know this is a late entry, but I'm just going to put it here. Because I'm not going to go and just rewind it just to go back a couple candles. But anyways, here we go. It set up the stop loss and TP for you. Basically, the risk reward here is 23.5 pips. And if we were to go back, we could let it play out. So if you were just let it, automatically run from there, you can see right here that the color changes. This is because at the specific time, price was probably consolidating. But if we let it run, there you go, and it would have hit profit target. So that's a basic explanation as to how to apply the K2 strategy. It's going to be hard for you to find a lot of valid entries right now just because of the market conditions. But I do have other strategies using the K2 indicators explained in the course. So there's still ways to trade. If you guys saw our results from yesterday, I was still using the K2 strategy, and let's see how much we locked in yesterday. So these are the trades we took for this week. These are trades from Sunday, trades from yesterday. We racked up a total of 443.3 pips, which is not that bad at all, especially during these market conditions. I'm sure if you guys are following, other trading groups, I mean, a lot of people aren't doing well right now. So you guys got to kind of work with what you have. Let me put these back. And yeah, so that's basically a quick explanation as to how to apply the K2 strategy. If you guys have any other questions, feel free to let me know. We don't have any questions right now, so I'm just going to be looking at the chart. But if you guys have something specific you guys want me to explain, feel free to let me know. I see Dijon. He asked for S&P, so let's look at that. I'm going to go in one more time. So here we go, S&P. Man's asking, can we look at how you would scalp US 30 during New York session? Sure. So I'm going to analyze this real quick, and after I'm done analyzing this, then I'll go back and show you guys how I scalp. All right, cool. Hey, Dijon, are you looking at this from a scalp perspective or from an intraday? Because if you're looking at how to scalp, I could look on the shorter time frame, but right now, I'll just look at it from a bigger time frame. I'm not sure how you guys are trading it in the indices chat. But anyways, it looks like it's in a range right now. So I mean it's obviously in a downtrend. The trend meter is not really working for the overall trend right now. Obviously, you guys can tell because of the current market conditions. But I'm just going to go down to one time frame so we can see clearly it's in a downtrend right here. If you're just following the trend on one time frame, which is a 30-minute, what we're looking at right now, if you did it manually, you could have seen that price is obviously trending down. If you drew your own trend lines, I'll take all this mess off the chart so you guys can see. So yeah, if you guys had the trend meter down here, it'll show you that it's trending down. You don't have to do all this work and draw trend lines. You can just look at the bottom, and if it's red, it's telling you that price is trending downwards. But let's add everything back on the chart. So it looks like we did get a sell signal right here. Let me see how far is it from support. I think it was too close. Yeah, it was about 100 pips. I'm not sure how calculations work for S&P. I do know how they work for US 30, but I mean, it does look like it's a little too close. So in this situation, I wouldn't have entered this trade. But if you enter this one up here, you can see that it pushed down a lot. So this would be a valid entry. Even this up here, you could have taken all these sell signals and made a ton of money. So right here, gonna roll this down, trace up a little bit, or let me just use the short tool. So you took this entry right here. It was at resistance, so I wouldn't have taken it. I know some people, they just ignore support resistance. You guys can do that too. I don't recommend it. But I mean, some people are riskier traders. So if you're a risky trader and you don't mind the drawdown or losing, then by all means you can just apply the strategy without the SR. Because the thing is, if you're not looking at support resistance, there's a ton of entries here, and you guys could make money regardless. I mean, my situation, I'm a pretty conservative trader, and I don't really like to lose. So I only take trades that I know are highly probable to win. But if you aren't using the support resistance, then obviously you would have won all these three trades, and maybe this one as it came back down. But let's go back to analyzing the chart. So, like I said, right here we have a sell signal. So we already know there's a sell bias. The price is literally ranging within this zone. So if you were to enter a sell, I would wait for it to break this support. So once it breaks this support area right here, you can see a drop. Because if you followed it from like way up here, you can see that whenever price broke support, it dropped pretty heavy. So if you took this trade right here, where price broke support. Could have made about what is it, 335 pips right there. Again, right here, price broke this support zone. Could have entered right here. Would have suffered some retracement. Came back down. Another 335 pips. I mean, you guys could do this all day. It's real easy. Right here, it broke the support again. Enter right there. Another 335 pips. Again, right here, price broke support. Entered for another 335 pips. I mean, you guys can see, if you guys know the direction of the trend and you just trade in the trend as it breaks support, you guys can, if you guys keep things simple, you guys can make a ton of money off this. This is similar to the strategy that I'm applying now. If you guys go back and watch the my video explaining the K2SR indicator, if you guys do have access to the indicator, this is exactly what I'm doing now. I'm just doing it on a higher time frame because due to all this noise, I don't really like all this noise. It kind of makes me a little more cautious than I want to be. But yeah, literally, if you applied this strategy and you didn't even need the K2 momentum indicator, even though it would have helped because it would have told you that price is moving down. Just because you knew that price was coming down from here. And the reason I know that is because there's a resistance up here. And if you zoom out, let me see. Yeah, if you zoom out, this is the new high. So price came up here, created a high, and it dropped back down. What do you think happens when it creates a new high again? So it came down, retraced down, pulled back, shot back up, and then it established another high here. So obviously, if it establishes another high, it's going to keep coming down. Right here, I wouldn't have taken these. I wouldn't consider this a high. It just looks like small pullback. So right here, if it pulled down, I'd consider this a low. So the high, the low, and then this would be the real high. This just looks like it went into some consolidation. So if I saw this, if I saw price reject off this area, then this would just look like consolidation to me. It doesn't look like a clear drop like it does right here. So you can see price pulled up right here, established a high. Resistance was plotted as it came down right here. You can see that it's creating smooth high lows. Right here, they're not very smooth high lows. It's kind of choppy. But if I took all this off the chart, you can see that there's some smoother high lows right here. And then you get extra confirmation with the K2SR indicator because it's going to be plotting these resistance points right here. So as you're just looking at it, it's high, low, high, low, high, low, high, low, high, low. And it's just going to keep continuing. Although right now it does look like it's in some consolidation. It's ranging right here, obviously. So that's why I would wait for price to break this support. Because once price breaks the support and closes within this area, like it's done right here, right here, right here, right here, right here, right here, like literally all throughout up here, you could expect price to continue downwards. So you expect price to close below the support and then just continue downwards. So yeah, John, this is what I'm noticing, or what I'm anticipating for S&P. I don't see the drop stopping anytime soon. Maybe if it tests this area, it might come up like it did right here. So I mean, worst case scenario, price will either reject off the support like it's done previously, but I do expect it to come back down. So even if price comes down, tests this support area, and rejects, it's probably just going to swing up a little bit, and then it'll either create a lower high and then come back down, or it might come up and test the support again, or this would be resistance, and then if that happens right there, then it'll create a double top or a triple top because it already tested twice. So a double or triple top up here, and then you can expect that to come down. The only problem is we're in Asia right now, so you're gonna have to wait for more volatility to pick up during London. So you're probably not gonna see much movement until London hits. But at that point, the institutions and the market makers they're gonna set the direction. So I would probably just wait, because if price does break this zone right here, then it might pull back a little higher. But as you can see right here, the price respects these zones very well. So you can see prices right here. It pulled down, tested the zone, rejected, came up. And as you can see here, this zone connected to this zone right here. So this was considered like a double top. And that's why it shot down so heavy. But just by looking at the zones, you can see that price respects it a lot. So it came down, respected it, came down, respected it, up, respected it, came down, rejected off this a little bit, moved to the side, came down, came up, came down, came up, and I'm expecting it to come down again. So that's where I see it going. I don't really like to eyeball specific price points. I like to analyze an entire area because you don't need to make perfect entry here. As long as you have a decent entry and you know where price is going, you can make money within that zone. Just like how it is right here. Like this is a full zone where you can go and enter your position. You don't have to enter at the top. You don't have to enter at the middle or the low. A lot of people like to catch. They like to determine where the top and the bottoms are. But the thing is, most of the time you're not going to get that right because even if this is considered the top, the market makers and institutions can push it up a little farther because if you do see this as a top, they might push it up a little farther to stop people out like it did right here. So as you can see right here, this is why I like to have zones instead of just resistance, because the thing is, if a lot of people put their stop losses in this area and the market makers just spike it up a little bit, and then what it does is it ends up stopping out all these people in this area, and then it comes back down, similar to right here. See, a lot of people here probably weren't expecting that price was going to pull back this far. They're probably thinking that price would just touch this support and then reject up. But this whole area right here, this is probably where there was a bunch of stop losses. So right here, as price came down, people were getting worried. And then, there's a ton of stop losses here. So obviously the market makers are going to spike the price down enough to stop everyone out. And I mean, it's the same situation that could happen over here. So let me go back to the chat. Sisu said, if there are several candles away from the vertical indicator, do you leave it alone? No, not necessarily, because you can, let me show you. Because you can see here, sometimes it comes down even farther. So right here, we got a sell signal. Obviously, it was going to retrace up, but it ended up coming back down. So, I mean, there isn't really an area where you would stop where you would determine, whether you continue using that signal or not. The difference with, Forex and indices is that, well, not just indices, but stocks in general, is that for stocks, like there will be areas where, there's supply and demand. But the thing is, a lot of people try to apply those same principles to Forex, and they don't apply because supply and demand don't really exist in Forex. You're trading two separate pairs. So price is going to keep going up as far as it wants. It's not like, there's a finite amount of, Australian dollars that you guys can buy or sell. The thing is, if market makers want to keep pushing it farther up, it's going to keep going up. It's not like stocks where, you can buy X amount of stocks, and at that point, there's no more stocks left. It's not the same with Forex. And a lot of people, they confuse that. Like a lot of people think that you can apply supply and demand in Forex, but you really can't, because there is no supply. Like there could be demand, like people could want Australian dollars or New Zealand dollars, but there's not going to be a supply where they run out. Like they're not going to run out of Australian dollars or New Zealand dollars, because what happens when they run out of money? The government just prints more money, and a lot of people don't understand that. But yeah, that just goes to show that not all principles apply across the board. I mean, most of them do, but not all of them. It's like when people use RSIs on Forex. RSIs don't really work in Forex. Like, let me just show you guys, because I see a lot of people that live by it in Forex, and people think that they actually work, but they really don't. Like, look right here. It's been oversold for how long? And people are like, oh yeah, you should sell right here. No, keeps going up. I mean, I don't understand how people apply RSIs to Forex. Hey, Aaron, do you remember the people before that had those special RSIs?
Yeah,
Where,
IML.
yeah, the IML people, they would have RSIs where it said, like sell that bitch or buy that bitch. And I'm like, bro,
Still at all.
RSIs don't work in Forex. Like, I don't, like, it drives me insane when I see people use RSIs in Forex. It doesn't work. Like, okay, so right here, it's not going to work. If you go to a stock, so let me go to a stock and show you guys. They're clearly different, but people just don't understand. I mean, it's because they learn bad info. People, like, I'm not going to bad talk IML, but a lot of people that don't know what they're talking about. So as you can see right here, this is clearly oversold. So price is coming down because there's only a finite amount of Tesla stock. Like right here, right here price was, I mean, it was over. So over here is, Aaron, can you check the signals? All right, cool. So over here, over here it was overbought. So obviously it came down. Over here it was, oversold. So it shot back up. The same principle doesn't work for Forex. I mean, a lot of people think it does, but it doesn't. So you can see here, it was overbought. So price came down. And then you can just keep running it through. Right here, it was oversold. So then it went back up. The thing with Forex is that it doesn't apply. So let me go back to, shit, man, my computer's so slow, dude. I need to fix the, okay, so yeah, so we're back at a Forex pair right here. As you can see here, price was way oversold. Like, you go to any Forex pair and you look at RSI, it's way oversold. And if you're trading stocks or indices or something, then yeah, obviously, there's a supply there. You'll have to sell it down. The thing is, you're not going to run out of Australian dollars. So it's going to keep pushing up, and it keeps pushing up regardless as to what the RSI says. So if you're using the RSI, I think that's probably the worst indicator to use for Forex. If you're using it to, catch where you think it's been overextended. I mean, it's just funny. It's funny because I see people live by this stuff in Forex, and it just doesn't work. But yeah, there goes my rant. John said my group didn't do shit. Yeah, I'm not surprised, John. But yeah, let me go back to S&P. That goes my little rant for today. Every single.
Yeah, they were all invalid, bro.
Okay, that's cool.
Hey, but it does look like the pound pairs could be bearish tonight. So hopefully that push our pound yen pair down.
Man, hopefully. That's what I'm hoping for.
Yeah, I think it should, bro. But even looking at the rest of the pound pairs, like the pound USD, the pound CAD, the pound Swiss, they all look bearish. Pound AUD bearish.
Do they?
Pound, yeah, they all look bearish, bro. So I think that we should be pretty cool.
Yeah, all of them are here. So the pound pod, it's red for the day. Pound CAD.
As long as the market doesn't do no crazy stuff during the news, like spike up like 200 pips, then shoot down.
I think there's news tonight, right?
I think so, yeah.
Okay, cool. Yeah, so S&P is consolidating right now. I don't think I'd scalp it.
Oh my god.
Let me see. I mean, there's always scalp opportunities when you're trading indices. Obviously, even with small movement, you'll be able to catch something. Let's see. Yeah, I think for S&P, if you're going to be scalping this, it's probably going to bounce within the zone during Asia. So I don't know if you want to trade within here. Personally, I probably wouldn't, but yeah, I'm gonna look at US 30 because I don't trade S&P, so I don't know how the pips work here. But I'm just gonna look at scalping on the US. It's the same thing. So whatever direction that I look at on US 30, you can trade the same direction for S&P. But I don't trade S&P, so I'm not familiar with it. Yeah, here we go. So yeah, the same thing. It also has a zone over here. It's just a little more spread out. So yeah, it's moving in the same direction. It looks like if it closes above this zone right here, and it'll just keep shooting up. Jeez, man, my computer is so slow. Take these off. All right, cool. Yeah, so if it closes within there, or if it closes within this zone, I think this is the whole area where it's going to be moving. Unless something crazy happens. I mean, something crazy always happens with indices. So, I mean, regardless, it might trade within the zone. It might not. It might break below. But it looks like, for the time being, it's 6 o'clock. So for the next 2-3 hours, it's probably going to trade within the zone. So, yeah, depending on where you're trying to trade, let me see if there's any signals that we have here. Yeah, so right here, it looks like, trying to see if there's any entries here. It looks like this might have been an entry. Personally, I wouldn't have taken it, but I think Curtis might have. If Curtis is looking at this. This looks like an entry right here, because I know Curtis takes some trades that are that they have some red bars in between. Generally, I like to see a strong bullish move following the low or the high. If you guys have seen my previous video where I explained my strategy, so I wouldn't have taken this trade. I would have taken this one right here. So go back. Actually, I wouldn't have taken that trade because possibly I might have taken this one. So I established the identified the low there. Long right there. And then it would have hit TT over there. So if you took that trade, I don't know if Curtis took it. I know Curtis was trading this morning. Actually, this was in the afternoon. But yeah, this would have been a nice, easy win right there, 500 pips. Let's see. Yeah, I'll go back to who asked earlier to go over scalping. Let me check. Oh man, are you still here? Let me check. Yeah, man's still here. All right, cool. I'll go over scalping. I think what you say here, you wanted, yeah, scalping US 30 during New York session. Okay, so I'm gonna go and zoom out, and then I'm gonna go to this morning. So this morning, market open around 5 here. So let's see. So if you guys are familiar with my my scalping strategy for indices, it's really simple. So I'm gonna just type it up here so you guys can see. So one, K2 signal present. The K2 signal is always going to be the catalyst when you guys determine whether to take trades or not. And the reason for that is because the K2 indicator pretty much tells you the direction of the momentum. So obviously you're only going to want to trade where price is moving. And this gives you a good catalyst as to which direction to trade. So as you can see here, like you have a buy signal pushes up a little bit, sell signal pushes down a little bit, and so on. Like as price moves, it's a little more choppy on the 5 minute. So if you go on the higher time frame, like the daily, see it's a little more accurate here because you can see when you get a buy signal, it pushes up. You get a sell signal, it pushes down a little bit, up, down, and so on. So let me go back to the 5 minute. It wouldn't really matter how much noise is going on here because you're only scalping. You're only going to be in it for a few seconds, if not minutes at max. So first of all, there's going to need to be a K2 signal present. Next, we're not using the trend meter because we're only scalping. We're going for quick movements. So next, you want to identify the swinging high for sells or swing low for buys. And the last requirement is you want to make sure that price isn't within, I think it was 100 to 150. I can't remember if it was 150 to 100 or if it was, if it was 150 to 200 or 100 to 150. It might have been 150 because I like enough space between so there's no rejection. So price isn't within 150 or 200 pips from the K2SR. All right, so let's run down these requirements. First requirement, you want to make sure that there's a K2 signal present. As you can see here, we have a buy signal. Oh, actually, let me add this here. So there's one more requirement. A strong bullish, bearish movement following swing. All right, cool. So this might not be an entry due to the third requirement. So let's go down the requirements. So first, you want to make sure that there's a K2 signal present. Right here, we have a buy signal. Next, you want to identify the swing high for sells, or right here, we're taking a buy, so you want to identify the swing low. So as you can see right here, price came down, it rejected off this area, and then shot up. So in this situation, this would be the swing low. The issue with identifying this is that, identifying swing lows it's going to be subjective. Like I said earlier, everyone's going to see it differently. I see this as a swing low. Some people might see this as a swing low. I mean, it's just really going to depend on you as a trader. You can also use a pivot high-low indicator to, help you identify, but it generally doesn't show up until, 5 or 10 pips later. So there's not going to be any indicator here, but this is going to give you, general understanding as to how you identify the swings. For the third requirement, there has to be a strong bullish or bearish movement following the swing. Since we're entering a buy right here, you want to make sure that there's a strong bullish movement. You want price to be pushing upwards. The reason why I wouldn't have taken this trade is because there's a bearish candle here. A strong bullish movement would be similar to, let me see. So this would be considered a strong bullish candle for, a strong bearish movement. So right here, you can see that there's 4 bearish candles. So this indicates a strong bearish movement to me. Let me see if I can find a bullish movement. So right here, no, right there. Not there either. Okay, so right here. So right here, in this situation, we would have identified this low. And then this would be, or actually, I'm just going to show you guys what a strong bearish movement looks like. Bullish movement looks like in my perspective. I know not everyone's going to agree with this, but this is kind of what I see as a strong bullish movement. You can see there's 3 green candles right there. So this is basically showing me that the bulls are strong right here. There's no bearish candles, within, showing that there's any weakness. So in this situation, I'd see a strong bearish movement and bullish movement. Same right here. Right here is a strong bullish movement for me. Strong bullish candles, then you can anticipate it to push up further. So let's go back to where we were looking. I know some people might identify this as a strong bullish movement. Personally, I wouldn't, because as I said earlier, I'm a pretty conservative trader, and I don't really like to lose. So I'm only going to take trades if there's a high chance of winning, almost guaranteed. But if you were to take this trade, so just say that you consider this a strong bullish move. First requirement was met. You have a K2 signal present. Next, you identified the swing low, which is right here. Next, you identified a strong bullish movement. To some people, this would be a strong bullish movement. So this might be a valid entry. And lastly, you just want to make sure that price isn't within 150 to 200 pips from the K2SR. So if you take a measuring tool and then you measure it from the top of this candle, you can see that the support or resistance is 1,300 pips away. So this gives you enough leeway and cushion for you to enter this trade if you wanted to take it. So in order to set up your stop loss and profit target, you're going to use the long tool since we're taking a long position. You'll set it at the open of the falling candle because this is where we're going to enter. And there you go. It's going to be set up. Generally, I'd put the stop loss below the swing low. So a little bit below here. So that'd probably be around 1,300 pips. One key thing that you guys need to do, I'm going to write it in here. All right, so I'm just going to asterisk this. This is key. Like, you guys have to know how to eliminate your risk. Must move stop loss to break even or in profit ASAP. So once price moves in profit, you always have to move your stop loss to break even or in profit, because if you guys understand how US 30 moves, it moves very fast. And if if you take a second to blink, you could go from nice in profit to completely negative and hitting your stop loss. So if you guys aren't able to act that fast and you guys don't know how to trade properly, I don't recommend you scalp US 30 or scalp at all, because this is a key thing. This is gonna make or break you. So let's run through this trade and see how this runs. So, all right, so right here, it retraced back. We're gonna let it push up a little bit, trace down a little bit. See, and this is why I wouldn't have taken this trade, because I didn't see a strong bullish movement, and that's why it pulled back so heavy. But let's see if it pulls up. It might pull up. Okay, so right here, if you're still in this trade, it still would have been active. It wouldn't have hit stop loss. But there was another entry that showed up right here. So anyways, as price shot up right here, you'd have to, yeah, okay, so price is in profit right there. When price went in profit right here, I probably would have moved the stop loss to break even or in profit. So as it pulled back right here, it would have stopped me out in profit. But then you could have re-entered right here with a buy stop. So if you're back in this trade, let's go back to, I'll leave the stop loss just so you guys can see where the stop loss was. If you let it run, there you go, you hit profit target. So some people will not follow what I'm telling you, and they won't move the stop loss to break even. And yeah, sure, you hit profit target, but odds are this isn't going to happen every time. So you can roll the dice and take your chances, but generally, like, I would move my stop loss to break even or in profit to avoid any of this. So say if you re-entered the trade right here, so say you would have got stopped off. I'm trying to move this thing, it's in the way. Yeah, so you would have gone stopped out in this area. You could have put a buy stop right here to re-enter as it came back up, and you would have entered on this candle right here as it shot up. So right here, if you move your stop loss to break even or slightly in profit, like right here, price would have pulled back but wouldn't have triggered it, and then would have shot back up, and then you would have hit full profit. So there's a lot of ways to to approach a scalping trade, but if you guys don't know what you're doing, then I recommend that you follow what I'm advising, because I'm advising this for a reason. I'm not just telling you guys to move your stop loss to break even. There's a reason behind it, because as you can see here, price got really close to hitting stop loss. And if you're trading US 30, US 30 is worth a lot, like 1,300 pips. This is kind of equivalent to $1 per pip. So you could have lost nearly $1,000 on this trade, just trading a 0.1 to a 0.3. Let's see, Jackson said, when you get taken out of position, do you ever re-enter? Yeah, I do sometimes. See, the reason why I would have re-entered this trade is because I got another sell signal right here. So this gives me a second confirmation that price is still going to shoot up, because right here it pulled back. It didn't trigger the stop loss, but it came up right here. We would have gone stopped out on this candle right here. But as I saw price come back down, I would have had a feeling that since we got this buy signal right here, it would shoot up, possibly, maybe not the whole TP, but enough for me to at least get back into the trade. And if it was to move in profit, I just move my stop loss to break even again, just to eliminate risk 100%. So regardless as to whether price pulls back and stops me out again, I still made some profit or got stopped out in profit. But all risk was pretty much removed at that point. So once you eliminate risk, I mean, you guys can do whatever you want and let it run to profit, or take partial profit. But I always recommend that you eliminate risk, like whenever possible. So let's keep moving forward. Let me see if there's any other entries here, just so I can show you guys. Looking for a sell signal. Okay, so right here we got a sell signal. So first requirement, there's a K2 signal present. You can see here we have a sell signal. Next, since we're taking a sell, you want to identify the swing high. So, I mean, this is a little subjective. As you can see here, price had a low down here. It swung up, so this could be the swing. But also, price came down right here, rejected, came back up, and then shot back down. So this could also have been a swing. So depending on where you saw that, it could have been one or the other. Another issue right here, looking at the third requirement, you need to confirm that there's a strong bullish or bearish movement following the swing. As you can see here, here's the swing. It came down, but there's a bullish candle in between. So this doesn't show me that there's a strong bearish movement. So I would have avoided this, but let's just set it up to see how it played out just in case. Because I know there's a lot of people here that use the K2 strategy, but they don't follow what I'm teaching. So I mean, if that's you and you like to take risks, then that's fine. But personally, I don't really want to take risks like that because it's unnecessary. The main key here is to survive, and this is why you see a lot of people blow their accounts because they take risks that they take more risk than they really need to. So I'll put the stop loss above the swing, 1,700 pips. Again for the profit target. And then we'll let it run down. So right here, you might have gone stopped out. See, the thing you also have to incorporate is the spread, because for certain brokers, like although it shows that you're in profit here, if you were trading on your own account, you wouldn't have been in profit because you still have to cover the spread. So I know for Hugo's, the spread's about like 227 to 300. So right here, we wouldn't have moved our stop loss in to break even or in profit until this candle, because you can see price on this candle right here only dropped down to about 230 pips. So the requirement here is to must move stop loss to break even or profit. I should change that. ASAP after in profit, because obviously you're not going to move your stop loss in, like to break even if you're still negative. That just wouldn't make any sense, because you want to come out either at break even or with some profit. So after in profit. So once you hit profit, I just wanted to show you guys that you're not going to be moving it too close. I think this example was kind of off because we didn't factor that in. But right now, so after this candle closed, now you would have been profit 430 pips. So in that situation there, you'll then move your stop loss to break even or in profit. So let's see how far it moves down. So move down a little further. If you guys followed my other videos where I explain the strategy, the way I apply my exit strategy and apply my adjustments to my stop loss is once it moves in profit, so on the next candle as this closed, I'd move my stop loss to the high of that candle. So now my stop loss is right there in profit and price is down here. So let's see as it moves down. As it moved down again, I would move my stop loss even further down here to the high of the next candle. And right there, I would have gone stopped out. So if I got stopped out right there, I would have made nearly 600 pips. And if you're trading with a broker that has indices with that calculates pips for US 30, $1 to a pip, then within this trade right here, within a few minutes, you would have made nearly $600. But you guys have to remember that the trade goes both ways. So if it went the opposite way, you'd be negative $600. So this is why eliminating your risk is key, and it's probably going to be the most important thing that you guys follow when you guys are trading, not just indices, but trading in general. Because the key to surviving this game and becoming consistently profitable is to eliminate risk as much as possible. And the thing here is you have the option to eliminate the risk. It's your choice. You can either move your stop loss to break even or in profit, or you can leave your stop loss where it originally is. And if price goes back and hits your stop loss, then there's only one person to blame for that. It's because you guys didn't make the decision to move your stop loss in profit. That's really key. It's not just with US30, but it's with pretty much anything you trade. It could be stocks, options, futures, cryptos, whatever. But yeah, let this keep running. See if it. There you go, and hit full profit. See, so if you're a risk taker, then yeah, you hit full profit right there. But the thing with me is, I'm happy with $600. Like, I'll take $600 any day, rather than negative $1,700. And I think that's the thing that a lot of people need to understand. It's all about managing risk. So right here we have another entry. If we apply the K2 strategy again, first you want to make sure that the K2 signal present. Right here we have a buy signal. Next you want to identify the swing low for a buy. So right here, price pulled down. We have a swing low down here. Next, you want to make sure that next you want to make sure that there's a strong bullish move. As you can see here, there's 3 bullish candles. So this would be considered a bullish move for me. So those 3 requirements are met. Lastly, just want to make sure price isn't within 150 to 200 pips from the K2SR. We map it from up here. It's about 2,000 pips. So this looks like a pretty good trade. So what I'm going to do is I'm going to use the long position because I'm going to enter on the open of the falling candle right here. And then I'm going to put my stop loss at the previous swing, which is down here. And then we'll put the same amount for profit, so 1178. And then let's run forward and see how it plays out. All right, so right here, you might have moved your stop loss and profit, depending how far it pushed. Yeah, so it pushed up to about 340 pips. So in this situation, I probably would have gone stopped out either at break even or in profit. But just for demonstration purposes, we're just going to keep running it. Even if I got stopped out right here, I would just put another buy stop right here. And then as price moved back up, then I'd re-enter the trade. So I probably would have re-entered somewhere around here. Or I mean, anywhere around here. I probably would have been refilled, but for sure I would have been refilled right here. Let me see how far it pushed up. Want to make sure you cover that spread. Spread hasn't been covered yet, so I probably wouldn't have moved my stop loss up yet. Okay, for sure I would have moved my stop loss from here because from entry, I made it in profit 600 pips. So in this situation, I'd move my stop loss in profit. Personally, I'd move it in profit, just a little higher than the break even, just to cover at least my spread and my commission. So right here, it looks like stop loss wasn't triggered yet. It came back up. It pushed back up again right there. Let's see if it hits TP. All right, it hits TP. All right, cool. So, I mean, yeah, if you guys applied the strategy right here, the K2 strategy for scalping, if you add all these 3 trades together, because obviously these were all winners. If you moved it in profit or at break even, you would have had like probably 10 to 30% of these profits. But if you let it run to full profit, these are 3 back-to-back wins for 1,030 pips, 1,700 pips, and 1,178 pips. So if you add all of that together, let's change the color here. So I think the first win was 1,030. The next was 1,700. And the last one was 1178. So if you add all of that together, that'd be a total of 3,908. So within, let me see how long was that. So we would enter this trade right here. In about 5 hours. In 5 hours, you would have made 3,908 pips. And if you're trading with a broker that, you know, calculates pips $1 per pip, then, I mean, you would have locked in $3,000 and $3,908 within 5 hours. Not bad at all. So this is why I like trading US 30. I know a lot of people trade S&P and NASDAQ. It's the same thing. They move in the same direction, but they're just worth less. But the thing is, it's like, okay, if I'm trading this, I might as well go big. So I go with US 30. And it moves a lot faster. So I prefer to just trade US 30 over any other indices. But, I mean, that shows the power of – sorry, guys, we have a bunch of alerts. Yeah, this shows the power of, you know, trading US 30 properly. If you use my scalping strategy, you know, clearly it works here. So let's move on to the next one. Man, no, I didn't trade US 30 at all today. I had too many questions. I mean, if you're in the chat today, I was pretty active in there. I wanted to, but you know, I needed to answer everyone's questions, which is, it's not a problem. I mean, you know, I know I'm gonna win regardless over time. So even if I didn't trade today, you know, I'll trade another day. But yeah, I did miss out on the trades today. I think Curtis was telling me the market was pretty good this morning. Unfortunately. Let's see if there's any other entries here that I can show you guys. Okay, so we have an entry right here. Same thing. I mean, it's really easy. Like once you practice this enough and you apply it enough, it's very simple. It's not really that hard. So right here, first requirement. Just want to make sure there's a K2 signal present. Right here we have a sell signal. Next, you want to identify the swing high since we're taking a sell. You can just eyeball it. This is the swing high right here. And then next, hey Aaron, can you check the alerts?
Yeah, I'm checking right now.
All right. So right here, we identified the K2 signal. Next, we identified the swing high. Next, you just want to make sure that there is a strong bearish movement following the swing. This is kind of considered a strong bearish movement. This is kind of iffy because there's not enough bearish candles to, you know, really confirm that this is a strong bearish movement. But technically, this would be considered a bearish movement since there are two strong bearish candles following the swing high. Like I said earlier, it's going to be very subjective. I mean, I see this as a strong swing high. Not everyone will see it the same way. But if you do, then yeah, this would be a valid entry for you. Lastly, you just want to make sure with the last requirement that price isn't within 100 to 200 pips from the K2SR. And if you measure this from here, it's good to go, 700 pips. All right, so let's set a sell entry right here. And then we're going to set the stop loss above the swing, 1600. Same prop target, 1500. All right, so let's let it run. And you guys got to just remember to move your stop loss to break even or in profit, you know, when it's possible. Well, let's leave it up here. Let's run this. There you go, deep in profit already. So on the first candle, went straight down, 600 pips. So in this situation, you're going to move your stop loss in profit. Move my stop loss a little further down, right there. This is just so I can cover, you know, I'll cover the commission spread. So right here, regardless as to whether price pulls back, I'm still going to lock in about 60 bucks. So prices to retrace and, you know, pull back or reverse right here, I still lock in profit. So profit is profit for me. I'm mostly focused on winning. I'm not trying to hit those home runs where I get, you know, the big wins. I'm focused on winning and not losing. So right here, as you can see, stop loss is in profit. So regardless, it's risk-free. So let's move forward. See, this is why you don't want to get screwed, because price will come and spike and it could easily reverse on you. So right here, I probably would have gone stopped out. If you're a risk taker and you let it run to full profit, let's see if it hits. Back in entry. So if it was back in entry right here, I probably would have put another sell order to get back in. So I probably would have re-entered right here. See, this is why you don't want to get screwed, because this could happen. Actually, yeah, I wouldn't have re-entered here because in order for me to have a sell stop, price would have to be above entry. And I try to catch it riding back down. But right here, price never came up. So in this situation right here, I might have put a sell stop right here now to catch it as it comes back down. But as you can see, price rejects and reverses randomly. And that's why you need to move your stop loss to break even or in profit as soon as possible. So as you can see here, at this point, I would have removed my trade because we have so many other signals here. So, you know, there's other opportunities to make entries down over here. So in this situation, I wouldn't have re-entered. But let's just see if it, if it ends up playing out. So yeah, if you held this trade and you didn't exit it right away, or you didn't move your stop loss, it'd still be active right now. So it never hit stop loss. You'd be back in profit. Once it reached back in profit, I would have, for sure moved my stop loss either in profit or closed out in profit. Because once you hang on to a trade this long, especially a scalp trade, this is when the risk gets really heavy because due to this situation, it really creates a lot of uncertainty as to where price is going to go because there's so many other entries here. So as you can see here, let me go back. So right here, price pulled back, and there was a bunch of different signals since then. So the problem with that is that price can shoot in either direction, because as you can see here, price usually respects the signals, and it goes to where we set the profit target. So in this situation, as price moved down, I would have exited right here, which would have been for a nice profit anyways, like an easy 700 pips. But yeah, I think that's as far as it goes for today on this. So those were the intraday trades. So if I did trade intraday today on US 30, I probably would have locked in some pretty decent profits because as you can see here, these are all the intraday trades from today. So it's about 1,000 pips, 1,700 pips, and 1,100 pips. And then if I took this one, it would have just been hanging out. And this is why I'm not really too worried if I miss any trades because I know if I don't take trades today, I'll take trades tomorrow. Every day is a new day, and the strategy works all around. Let's see. Is Curtis in here? Let's see pips. No, Curtis messaged me, but so anyways. All right, cool. So let me go down the list again. See if I missed anything. If not, I saw another question down there. Yeah, man. Does this help you? I just want to make sure that this helped answer your question regarding my scalping for US 30. And as you can see, it's pretty simple. Yeah, sure, no problem. Yeah, as you can see, it's really simple. The thing is, the real key to applying the strategy is going to be, obviously the K2 indicator. This is going to be the most important thing because this indicator shows you the direction of price. This is kind of your cheat code. If you guys have this, you guys can see where price is going. Because the thing is, if you don't have this, it's all a guessing game. Like, how do you know which direction is price moving? Like, which direction is momentum moving? You guys can look for any indicator that has momentum, and there's nothing that comes close to what I have to offer. So, I mean, if we even go to something, I'm going to try to go to something that's really popular. I don't even know what's good. If you guys know any momentum indicators that you think could possibly be better than the K2 indicator, feel free to let me know. And then I'm gonna go and look through here to see if there's. No, this isn't even the same thing. It's an oscillator. Like, I've never seen any other indicator that can do what K2 does. I know there's a lot of people in the group that were in the group previously that are trying to copy my indicator, but I mean, good luck. I created this indicator, so you guys aren't going to find anything that's similar. I created the code, created everything. So, yeah, there's no indicator here that I can find that, you know, even comes near. Like you just toggle it, and there you go. You know where price is going. This is the main key. It's the main key that helps you win trades because, you know, you have something here that no one else has pretty much. It pretty much lines it up for you. Oh yeah, Jackson said the only indicator he used was the stochastic. Yeah, the problem with the stochastic, this indicator has some uh, stochastic in it. Basically, when I created this indicator, I took the best parts of a lot of other indicators that I like using, and I pretty much made um, like a super indicator because this pretty much has everything that I like from previous indicators. So let me go to stochastic. The problem, I know a lot of people trade, you know, stochastic crossovers, but the problem with the crossovers is that they're not very accurate. So you can see here price crossed up. So some people would have taken a buy here, and it crossed back down. People would have taken a sell, and you can see here it crosses way too often, and it's hard for you to really gauge, you know, where you should be entering a trade. So you can see here price crosses a lot. Price cross down here. I'm trying to see if it lines up with any of the K2 and signals. So right here, we got a buy signal, but it didn't show. So right here, it kind of lined up with this one, but not exactly. Right here, again, swung back down. Like as you can see here, it's very inaccurate because although I do like this indicator, this is one of my favorite indicators. There's a lot of false signals, and you don't really know, you know, which way to be trading. The reason my indicator works so well is because you tie it with the trend meter, and you know exactly which direction to be trading in. So yeah, this is the main catalyst. All of my trades are based off a K2 signal. If I don't get a K2 signal, then I'm not even going to look at the chart because I want to be trading in the direction of momentum, obviously. The next important indicator would be obviously the K2 trend meter, so you can see where the overall trend is. And lastly, of course, the K2SR indicator, because if you guys tie all of these together, you kind of have the holy grail here. Because let me zoom out. So for one, you know which direction price is going. Next, you know where the overall trend is. You put those two together, and you know exactly where to be trading. Lastly, the K2SR indicator, which plots the support resistance on the chart for you. So let me take this off and take this off. So right here, you can see where price is rejecting from. You know, it's pretty clear. Price came down, rejected, 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 came up, rejected, rejected up here. If you guys don't have that, I mean, I've seen a lot of people draw support resistance, and they don't draw them where I would expect them to be. So if I just eyeball this would probably look like resistance for me. So I'll put a line right there. You know, this might be a support for me. This might be a support. But the problem is when you line up your own support resistance, it's very subjective, and you're not going to be lining it up, you know, in the perfect points. The thing with the K2SR indicator is that I've created an algorithm that will, you know, it'll plot the areas on the chart where price is tested more than twice, and it's going to keep plotting, you know, every area where it's tested, you know, 2, 3, 4 times. And in this situation, it's kind of hard for you to do it yourself because how can you look at, you know, the entire chart? So right here, these are the support resistance areas that I kind of lined up. And then when I line up the K2SR indicator, see, I was kind of close. I wasn't that far off, except this one. This one's obviously off. The price obviously hasn't tested this area. And it's not even the area. So these lines are exact data points where price is tested. It's not a nearby area. So the reason I put this here is because I saw price testing this area. The thing with these lines is that price has tested that exact same price point. So, I mean, you know, you can't beat the computer, obviously. Right here, I was pretty on point with this one. You can see price tested, you know, multiple times at the exact price point. Same with down here. Right here, I was kind of close, but I wasn't close enough. As you can see right here, the support was few pips down, so I can delete that. And then right here, it doesn't look like there's a support tested here yet. So it looks like this may be, one touch. If price comes down and tests this area again, then it'll set up a support down here. So you can see right here, price tested this area, tested this area, tested this area, and it's pretty on point. So if you guys put that all together, so you guys know exactly the direction of price, you know the direction of the trend, and then you have the K2SR indicator to basically give you a heads up to where price is likely to reject. So right here, you probably would have entered this because obviously support was so close. But as price closed below the support area, you could have entered right here and then pretty much rode this entire thing down for 3,000 pips. And I mean, who wouldn't want 3,000 pips? Obviously, you're trading US 30. That's equivalent to $3,167 within 3 hours, which is a pretty good trade-off if you ask me. Let's see. C-Soup said, have you ever used MACD with the CCI? I've actually never used CCI. I did use MACD with the Chastic. I've heard of CCI before, but I've never really used it. Is it this one? Woody's or Commodity Channel Index? Let's see what it does. Let me just try both, see what they are. I'm assuming it's a CCI one, so I'm just gonna, Woody's. Okay, so Woody's is right here. Personally, I haven't used Woody's. I do have a special indicator that was coded for me. That it's a little variation of Woody's. But I know Woody's CCI, or yeah, I mean not CCI, but just Woody's. This was implemented in the K2 indicator as well. Because of the coder that I worked with, he was familiar with this indicator, but I kind of took like the best parts from, he took the best parts from Woody's. I took some parts from the Chapstick and the MACD. But there's a couple other indicators. Those aren't the only indicators. We basically have we had a database of a lot of indicators that I liked, and that I knew would win very often. They had to have a high win percentage. So put all together, I created the K2 indicator. So let's see. Oh wow, Curtis just killed it. Is Curtis in here? So I'm gonna show you guys Curtis's profits today. Yeah, wow, made a lot. He made over 700. So this could have been Aaron, but it isn't. Aaron, where are you at? You still in here?
I'm right here.
You see his profits?
I see. Yeah, he showed me already.
Yeah, that's crazy.
I see y'all teasing me.
Yeah.
But I have to tell him he got to be careful with those lot sizes, bro, because right now isn't the right time to be using big lot sizes on small accounts.
And I was saying if all leverage was a picture. Yeah, man, that was a lot. That was a lot. I wish that could have been me. I'm probably gonna start scalping tonight. I missed out on a lot of profits this morning, which is fine. I know profits come and go, so I'm not too worried about that. You guys can't chase the money. You just gotta let the trades come to you. So let me go back to the chat. C-Soup said he worked with someone that loved that thing, found it very confusing. You guys very clear. Yeah, thanks, man. So yeah, I know a lot of people that use this, and they're really good with it. Personally, I don't know how to use it. I don't even know what I'm looking at. I'm pretty sure it's a crossover type. But personally, yeah, I'm not really familiar with it, so I can't really say how it's used. It looks like it's kind of similar to a MACD. It looks like when price crosses, that's when, yeah, it looks when price crosses, that's when you're supposed to enter a trade, or that's when it shifts from buy to sell. It's actually a pretty good indicator. It kind of lines up with K2 a little bit. The only difference is that K2 is a little more accurate because you can see here, price kind of bounces around a lot. But with the K2 indicator, you could kind of, it's kind of delayed. It's delayed, but in a good way. It's delayed to show you that that the signal is valid. But no, this looks like a good indicator. I just don't know how to read it. It looks like whenever price crosses, you're supposed to buy or sell. So it kind of does line up with K2 a little bit, but not so much. But this is probably the closest thing. So if you guys learn how to use Woodies, I think it would be a good indicator. But I mean, if you're subscribing to K2, there's no point, because I see a lot of people trying to copy my indicator. But I mean, obviously, it can be copied. Like people will try to create a similar indicator, but then they're using like 6 indicators to just get this signal. So the thing is, it's kind of like, all right, what's the point? It's going to be extremely hard for you to take any trades because you need there's so many requirements to be met. And that's kind of similar to how I created this strategy. I mean, this indicator. Like I said, I took the best parts from different indicators and I put them into this, super indicator. So pretty much when all those requirements are met, that gives you a K2 signal. And yeah, that's pretty much it. See, Jackson said use the same strategy used for indices for Forex. So the scalping strategy, not so much. The reason that scalping strategy works for US 30 and indices is because it's highly volatile and it moves very fast. So if you compare that to, so let's go to another pair for, I'm going to try to find a decent pair, like a pair that's similar to indices would be like GA, EN, what else? Maybe GC. Because if you look at these pairs, let me go to the 5-minute. You can see like within a short period of time, price moves like a indice. It moves like close to 100 pips. So this isn't a 1 hour time frame. I mean, a 1 hour time. Even a small movement, if it's consolidating like it is right here, it still moves like 20 or 30 pips. If you compare this to, say, a slow moving pair like, I'm trying to think what's a slow moving pair like, a pair like odd USD. So if you want to compare that to like odd USD, I'll try to pull it out of this area because I have we still have an active trade, and this is why we have this still here. So yeah, if you were to measure odd USD, you can see that price doesn't move as much. It moves like half the amount as GA. So if you want to compare it to scalping, it's going to be very hard for you to scalp something like this. Main reason is because the spread is so heavy. The spread is going to be your spread's probably going to be wider than mine. I have a special account, so my spread's a little less. I have a DMA account. But if you're going to be scalping, like how I explained earlier, it's going to be a little harder because, so say right here, we have a buy signal, and then you want to identify the swing low. And then say you wanted to enter this trade here. Like you can let it run pretty far out. I mean, the only problem is that, if you're scalping, you're not really trying to hold the trade for that long. And this would be way too long to be holding a scalp trade. So if you entered on this candle right here, you'd be holding this trade for nearly an hour. And this is just, that's crazy, because if you're holding that for that long, I mean, you might as well trade intraday. But I mean, it's still possible. I'm not saying that it doesn't work, because clearly it does. You saw here that it worked. But personally, I wouldn't do it, because the problem with that is you might get stuck in the trade. So say right here. So in this situation, this is another valid trade. You identify the swing low right here. We got a signal. These both two match up. I'm trying to see why did this reverse. I'm gonna add the SRs to the chart. Let's replay it. I'm like curious why it trades. Okay, so right here, you measure this from the next, and it's kind of hard to gauge because see right here the distance between here and the resistance is 5 pips. This is probably exactly why I wouldn't enter this trade, just because it's so close to the resistance, and I can see now why price reversed. You can see here price went up and then reversed heavily. The problem with scalping on Forex is because on US 30, you're able to move your stop loss and profit pretty quickly. The problem with here is you have to cover the spread. Right now, spread's only 1.8, but if you're trading this pair during a time when the spread's a little wider, like 3 pips, you're going to be screwed because you can see right here, once it gets to 3 pips like that, you're going to be super screwed because once you put your stop loss there, you still have to cover the spread going backwards. So as you can see here, price pulled back, and you would still get stopped out with not a huge loss, but you wouldn't have stopped out in profit, which is horrible. It's kind of you might as well trade on the bigger chart just to have that safety net. See, Jackson said, what are your favorite pairs to scalp? I only scalp US 30, but I don't recommend you scalp that unless you're experienced and you know how to trade it, because the problem with US 30 is that it moves way too fast. If you want to scalp something similar and is less dangerous, then you can scalp S&P and NASDAQ. You probably should stay with NASDAQ. NASDAQ is probably like a third of the cost of US 30. So it's not going to be worth as much, but it moves in the same direction. So if you look at the NASDAQ right here, you can see that it's kind of in consolidation right here. If you pull up US 30, it looks nearly the same. It's very identical. It's not exactly on point, but they both move in the same direction. So those would be 2 good pairs to scalp from if you wanted to scalp indices. If you wanted to scalp Forex, then I would go to a fast-moving pair, something similar to like odd NZD, GBP, odd, so AU, GA, and GN. These pairs move very fast. So if you go to this pair, it moves just like in indices. So you can see here every 5-minute candle moves nearly 30 pips. So compared to odd USD that we were looking at earlier, it moves like 3 to 5 pips per per candle. But you can see here on GA, it moves like 92 pips. It moves pretty fast. So if you were to scalp this, a little closer. So right here, this would be a valid entry, obviously, because, and then you just have to gauge the resistance right here. It's about 13 pips. So I think if you're going to be determining, if it's too close, I think 10 pips would probably be a good range. So as long as resistance is at least 10 pips away, then you should be fine. The reason, like how I calculated that was I know the spread right now is super wide, but if you're trading this during, New York or London, then the spread will be a lot less. So if you're trading this, you kind of want to gauge it where you can at least make a little bit of profits. You want to make sure that the resistance is at least more than the spread plus a few pips, because you want to move your stop loss and profit, or to break even. That way, if prices to reverse, then you guarantee at least a small win or break even, and you pretty much eliminate risk 100%, because that's going to be the main key in you surviving while trading. It's one of the things that a lot of people don't understand. But once you understand risk management, then you'll be perfect, because you already have the strategy to follow, and all you need to do is add risk management to that. So if you apply a good strategy with risk management, overall long term you're going to be successful in trading. So let's go back here. First requirement was that there's a K2 signal present. So right here we have a signal. Next, you can identify the swing low, which is right here. So we have the swing high, came back down, swing low right here. And then next, you just want to make sure that price isn't within, at least the spread, plus I'd add like 3 or 5 pips on top of that. So as we looked earlier, it's about 13, 14 pips from the entry point. The spread's 9.2, but like I said earlier, the spread's going to be a lot tighter during busier hours. So I would probably consider this a good trade because this trade came up at about 12:45, so that was still a New York session, and I'm sure the spread was a lot tighter. So since all those requirements were met, now you can set your position right here. So right here, we're going to be aiming for about 30 pips. And then we'll let it run. Right here is price pushed up. Let's see how far is it. You want to make sure you at least cover the spread. So I don't think this is 9 pips yet. It's only 5 pips. We'll let it push a little further. Right here, it pushed up nearly 15 pips. So in this situation, you can move your stop loss up, move it in profit, and you just pretty much keep. Aaron, can you check these signals?
Yes, sir. Make my way downtown.
So right there, you would hit profit target. So if you're scalping GA, you'd have made about 30 pips in 45 minutes, which is not too bad. I mean, going over an hour is kind of pushing it, but I mean, in some situations, you kind of just have to let it run. But if you're applying the exit strategy, it wouldn't matter because you wouldn't have to really risk much because this trade was very risk-free once price reached this area. But if you just kept moving your stop loss up, like how I said with the previous candle, you'd be fine because as price pulled back, you'd gone stop down in profit. Or you could even just moved it, slightly in profit and then let your trade run a full profit. But yeah, that's pretty much how you would apply it with Forex pairs. Personally, I would keep it to the fast-moving pairs. So I would keep it to GA. Let me see, what else did I say? Yeah, so like AN, EA, EN, GA, and GN. So pretty much AN, and then all the euro pairs that are paired with the New Zealand dollar or the Australian dollar. The reason why these move so fast are because there's a huge gap between the two currencies. So as you can see here, the British pound to the Australian dollar, 1 pound is equal to 1.95 Australian dollars. And that's why there's such a huge spread between, because more money's involved with these pairs and they move a lot faster. So that's one way for you to gauge the price and whatnot. I'm trying to think of any other pairs that are good, but I think those are probably the best pairs for you to scalp. I mean, you can also scalp GJ. I see a lot of people trade GJ and scalp it, but it just kind of depends on the market conditions. So you can see here, 1 pip is worth about 8. I mean, one candle is worth about 8 pips. So it's going to be kind of hard for you to make a margin off that. So as you can see here, in 25 minutes, price only moved 22 pips compared to one of these other pairs like EA. See, price moves a lot heavier. What was another pair I said? EN. I know EN moves a lot. So you look at one candle right here. See, one candle moves 22 pips. That's how much that's how much you move for a whole hour with AU. And that's kind of where you can see what moves fast. If you want to go through the pairs one by one, you guys can do that. And looking over here at GA, one candle moves 27 pips, and that's pretty huge compared to normal pair like AU. Or like one candle will move. See, like in 20 minutes, it's only moved 6 pips. You're not going to be able to scalp that. It's impossible. So let me see. I'm going to go back to the questions. So mine said, which time frames are you looking at for intraday currency pairs? So when I trade intraday, I usually look at the 30-minute. That's how I apply the K2 strategy most of the time. That's how me and Aaron call our signals usually. The only problem is that it's going to be hard to find an overall trend. So let me switch the trend meter back to the normal time, 30-minute, 1 hour, 2 hour, and 4 hour. So as you can see right here, Aaron, do you see this GU? How did we miss this?
You said what?
How do we miss this GU? Did you see this earlier?
You said it was too close to support.
Oh, okay. Sorry. Oh yeah, no, we looked at it. Test support on the 1 hour, right?
Mm-hmm.
Yeah, it's barely breaking the support. So if price broke below it, then this might be a good entry. The only problem is that there's news coming up in about a couple hours, maybe 4 hours. So that makes it a little bit of a risky trade. But normally, when I do trade intraday, I trade on the 30-minute. The reason I like the 30-minute is because there's a lot of entries. So there's a lot of entries where you can get in and out. So if you look over here, I'm just going to take off the SAR so it's easier to see. So as you can see right here, if you're trading GU and you're just looking for entries here, there's a ton of intraday entries. So right here, there's a zoom out from this. So I think we're looking here. We're looking right here. So as you can see here, there's a ton of entries right here. So right here, they're both green, so that gives you a valid buy. So in this situation, you'd enter a buy. You would have locked in 96 pips right there, and you would have held on for a very long time, but eventually you'd hit profit target. You could have entered this one too right here, or another 96 pips. Another one right here for another 96 pips. And you can see here that price eventually hits way down here. I mean, eventually. It's only because price moves so slow for GU. You can see here, within like 7 hours, price moves like 15 pips. So it's kind of hard for you to really enter anything. It's just really going to depend on the market conditions too. I mean, I'm sure you're aware, we're in Corona. So price can go from moving, 5 pips an hour, or it can move to 100 pips an hour. It really depends on, how the market wants to move. But as you can see here, like the 30-minute provides for a ton of great entries. It's literally a money-making machine if you if you find a very good trend, and then you just take all the entries. So right here, there were like nonstop wins, and it looks like price reversed right here. I mean, if we had the SRs on, so let's see. Yeah, you would have seen that resistance was there, so you probably wouldn't have taken that trade. But just looking back, you can see, there's 1, 2, 3, 4, 5, 6, 7. There's about 7 back-to-back wins for all nearly 100 pips, so that'd be 700 pips within this, short time frame. So yeah, in my perspective, I also tested it on many time frames. I think 30 minutes is the best time frame to trade on. I used to like the 1 hour. The only problem with the 1 hour is you're not going to get very many entries. The reason for that is because, there's only so many hours in a day. You're not going to find, by the time you wait for these candles to close, the problem with the indicator is that they don't close until they're confirmed. So you have to wait for the actual candle to close. So the problem is, you might get a bunch of false signals. You get signals, but they're not going to close out. And that's going to frustrate you if you're waiting, every hour, every day, and there's only so many hours per session. So say if you were to enter, like sum it up here, you got like a sell signal, but it didn't close out. In that situation, you just would have to wait for another sell signal. But I mean, the payout is a lot bigger if you trade the 1 hour. But I would consider the 1 hour closer to more so like swing trading. Because let's see, if we enter this trade right here, see, you wouldn't have hit profit target. Profit target would have been 319, but you wouldn't have hit profit target until way down here. So if you check out how long this took for you to hit profit target, it would have taken you 3 days. And, obviously that's not intraday, that's swing trading. But I mean, it still hits. So if you're looking to intraday trade, I would trade on the 30-minute. If you want to hold something longer than the day, then you can move to the 1 hour. The 15-minute also works. The only problem with the 15-minute is that you're going to get a lot of false signals. So as you can see right here, there's a bunch of false signals. It's going to be hard for you to really identify where a good signal is. this is where the K2SR comes in really handy, because it's going to show you where price is like likely to reject. So you can erode this up here, but if you move price over here, you can see that there's a ton of areas where price, is likely to reject from, and that's where you would avoid certain trades. So as you can see right here, there's like support. You'll see that price always rejects perfectly off these support resistance points, and that's what I like so much about this indicator. Is that, let's take everything else off. Yeah, if you guys take everything off, the support resistance will just automatically adjust for you. So as you can see here, price comes around and it really rejects off these support resistance on point. So there's another resistance right there, and it just keeps rejecting off these points. And you can see how accurate it is. So I mean, yeah, it's an example of how I trade off the intraday. Let me see if there's any other questions here. Jackson said, I'm pretty sure you answered this, but do you not use trend meter when scalping indices? Yeah, I don't use the trend meter when I scalp indices. The reason for that is because, like I said earlier, indices are very volatile. So technically, I still do use the trend meter just to make sure I'm not trading in the wrong direction. But generally it's going to be neutral. So you can see down here it's neutral. And when it's neutral, you can trade in both directions. But I'm going to try to find an area where it was trending. See, like right here, it was trending up. I probably wouldn't have taken any sells, just because, obviously you don't want to be trading against the trend. So right here, you can see, price came down a little bit, but then it corrected and reversed back up because the overall trend is green. Same with right here. You could erode this down, but again, right here, it bounced up. So generally, when the market's trending, then I'm only going to be trading in that direction. But if the market is blue, if the trend is blue or it's neutral, I'll trade in both directions, because this is actually the better time to scalp. Because when you're scalping, you kind of don't want to be scalping in a certain direction. If the market's trending, then you might as well intraday trade, because you can just ride the whole trend down. But when you're scalping, you kind of want to go where price is indecisive, because the thing is, you have these tools that a lot of other people don't have. So you're able to see, where price is moving. Like a normal person, if you're looking at this chart, let me zoom out. Yeah, a normal person, like, it'd be hard for a normal person to spot that, price was moving this direction without the indicator. So if you take the indicator off, it just looks like price is consolidating right here. And right here too. But I think there was a sell signal before this consolidation ended. So let me put the indicators back on. Yeah, so you can see right here, you could have scalped this up a little bit, scalp this down, depending on, the requirements that we talked about. But this is really key right here. So right here, you got a sell signal. And even though you wouldn't want to take it where it is right here, as you can see, when price breaks below the support, there's two support zones right here. You already know the direction of the trend. So as price broke below these support zones right here, you could have entered a sell right here and made a huge profit. There's a ton of ways to apply the strategy. I'm sure you guys have access to the course. So in the course, I explain the different ways I apply K2. There's a lot of ways to apply it. Obviously the original works best, but with the current market conditions, you're not going to be able to find an overall trend very often, and that's why you kind of have to make small variations to the original strategy, just in order to capitalize off it. Because if you know the direction of price, there's a lot of things you can do with that, because a lot of people don't know where the direction of price is going. Let's see. Maine said, will you be taking live trades on Zoom during New York session tomorrow? I might. I'm thinking about it. So maybe tomorrow morning at 9 a.m. I'll probably be up before that. So if I'm gonna be going live, I'll let you guys know. Let me check if there's news tomorrow, because if there's news, then I'm definitely not gonna be scalping or trading. I'm gonna open up my browser right now to see if I can. Oh, I have our FOREX Factory. Let's see, okay, calendar. So news looks like it's fine tomorrow. So tomorrow, I'll see how the market looks, and if it's good, then I'll be on live around say 9 a.m. I'm gonna be scalping on my own during the first hours because I need to be fully focused when I'm scalping. But around 9 a.m. once the market starts dying down, then I'll go live and I'll help you guys out with some trades. But personally, I'll probably be scalping on my own first, just so I can make my own money. And then once I make enough money, then I'll go on live to pretty much give you guys some trades. All right, let's see. Tyler said all odd pairs just went nuts. Let's check it out.
Oh shit. That's a good thing, shit. Excuse me. Oh my lord. Oh my god.
What the fuck?
You see that, bro?
Okay, I don't know what the fuck happened here. That's crazy.
Oh my god.
That's crazy. Oh, Jackson said to check out OddCAD anyway, so I checked out OddCAD.
Oh my god.
And it does not. Oh, that's crazy. 50 pips. Oh, there was news right now. That's why.
Was it for AUD?
Yeah, that was AUD news.
Oh shit. What the hell going on? Oh my lord. Hey, I hope Eurocat hey, check Eurocat. Hope you did the same thing. Man.
I didn't even fill. Did we cancel this? I can't remember. Did we?
Nah, but you did say you were gonna cancel it if it didn't
Yeah, I'm probably gonna cancel it.
within the next hour, yeah. Oh man, that's crazy. I mean pound. Hey, but I was just saying that about the about pound AUD and pound NZD that it was gonna drop. Hey, check it out real fast. They all like they're in a bearish movement. The little the pound pairs. Oh yeah, I know it. Yep.
Yep, it's a crazy drop.
Oh, bro, imagine putting to that sell signal. I don't know what was going on.
I think there was a support right here. That's why I have this line. Damn, see, if you guys took this sell signal right here, the K2, how it lined up. Oh man, you would have made a lot of money. Jeez, look at that. Dude, 171 pips.
Hey, check out UCAT. Cisco said that it spiked on them. I'm guessing it spiked down.
No, I didn't really move. See spiked on you?
Maybe like.
Oh, maybe something about CHF.
UC. Oh yeah, maybe that. Yeah.
Unless it was this spike right here. Oh, I don't really see a spike here. Hey, CC, are you talking about UCAD or UCHF?
It could have been UCAD. UCAD did drop like was that 40 pips probably?
Oh yeah, I guess that's definitely a problem for UCAD.
It just spiked right down to support, so it could maybe reverse back to the upside from there. So it all depends on how this 1 hour candle closes.
Oh, you took a buy right here. Let's go back and see. Because usually, if you go back, you can see what happened there. So there's no in a situation where there's no resistance on the specific chart. What you have to do is you're gonna have to go to a higher time frame, like we talked about earlier. And see, this is why I wouldn't have taken this trade because the 1 hour resistance is way too close. Yeah, 13 pips. You need at least 15
Exactly.
pips. That's way too close. That's exactly why it rejected from there. So let's see. Yeah, see.
Namaste with you forever.
Yeah, you got to make sure just whenever you take a trade and there's no resistance there, just make sure to look on the higher time frame. So, clearly there's nothing here. Let me just take off the SR. So this is where entry would be. Just gonna put a line there. This is where you would have entered from. If you go on the higher time frame, the 1 hour, yeah, you can see the resistance is way too close. You can also go on the higher time frames, and this is going to give you confirmation that that's a strong resistance. So if there's, I'm just going to line it up right here. Yeah, so if you find that resistance again on the 2 hour or 4 hour, doesn't look like it on the 8 hour. 5. Yeah, so it's just on the 1 hour, but the thing is, once you go on the higher time frames, like this is going to indicate where there's a strong resistance point. But you can see here, it's more prevalent for you to see how price rejects. I know we're looking on the low time frames, but if you go on the higher time frames, like the 4 hour, like price rejects off them like perfectly, and that's why you kind of want to confirm on different time frames. But yeah, it's all right, Sisu. Like this happens. It's very common. You're still learning the strategy. But as you keep practicing, it's gonna be second nature to you. Just like how it is with me and Aaron. Like we don't even have to think about it. We just look at multiple time frames just because we can have extra confirmation. But you'll learn eventually. Let's see. So we have another. Oh yeah, no, definitely. I think after you start using K2 every day for like at least a month, everything's just gonna fall in place. Like it's gonna be, the requirements are, exactly what to look for. You're gonna look for a signal, and then you're gonna look for the trend meter, and then you're gonna just make sure that, the SR isn't too close. And obviously, if there's no SR for the 30-minute, you're just gonna have to move up the time frame, and see that it was up there. But yeah, it just comes with practice. Let's see. Jackson said, still good for your CAD. Oh, sorry, Jackson. I know I saw your question about AC earlier, so let me pull that back up. Yeah, so I can't explain this spike. I think there was news. Let me check the.
That's crazy.
There was news at 6:30. That's where the spike came from. It was heavy Australian news. So if you're wondering, where that spike came from, it came from this news right here, and that's why we try to avoid news like whenever possible, because crazy stuff like this happens. But looking at odd cat, it looks like it's still going to continue up. So it looks like if price breaks this area, it'll just create a new zone, and then it'll just push on upwards. Because it looks like the low is already established right here. So the low was here, consolidated a little bit, and it was trying to break through to continue upwards, which it did right here. So as this closes, it's probably just going to keep pushing up. Let's see, another one, your CAD. Yeah, checking if your CAD. So we're probably going to cancel this. I'll actually send it out right now. It still looks like a good trade, and I think it's still going to come up, but the only problem is that it's so far down already. So this is our entry right here. I mean, it clearly didn't fill. I'm going to go ahead and close this stuff. Close that. Yeah, so let me measure this. This is our entry up here. I mean, it's not that far. Aaron, what do you think? 32 pips. You think we should just leave it?
I think we should see how it's looking in the next few hours. But if it's still dropping, we should just cancel it.
Yeah. So yeah, Jackson, we're gonna leave it up for right now. The thing is, price might come up and swing up and trigger our order. So if that happens, then I mean it could be a great thing. So we could pretty much just leave it there for now, and then if you want to fill it later, then damn, I just delete all my alerts too. So I can put it back on. Oh man, that was stupid. Okay, whatever. I'll put them back on later. But yeah, I'm just gonna wait for it to let's add another alert there. So let me yeah, we're just gonna keep watching it until it gets nearby. It looks like it's rejecting off this area though, so it might actually swing back up on the 4-hour. Yeah, because it closed below there, but it might just retrace back up. It's still stuck in that that little zoned area. So we probably should just give it a little more time. Like Jack said, so if you get a buy signal on the next, and the next candle shoots down, you see buy signal. So if you get buy signal, and the next candle shoots down. I'm trying to read your question. Sorry, let's see. So if you get a buy signal and the next candle shoots down, so are you talking about on the 4-hour or are you looking at the 30-minute? I think we might be looking at different charts. Okay, so I think we might be looking at the 30-minute, possibly. So if you get a buy signal and the next candle shoots down before you can get in. Yeah, so in that situation, like similar to right here, I think this answers your question. So right here, you can see price back up to this area. Yeah, so if it's a valid entry, like it is right here, and you know all the requirements are met. The only problem is the the resistance is pretty close. But if you're taking a risky trade and you're not looking at the support resistance, then yeah, as you can see from the next candle, you can see right here, like when it moved from the next candle, it actually pulled back. So right here, it pulled back. As it pulled back, you could put your buy stop like you asked right here, like where your entry would have been, like if you're entering late, and then you would have rode this push back up right here. So similar to trying to find an example where it pulled back, but then it shot back in the proper direction. I mean, this isn't a valid trade right here, but yeah, similar to what you were saying. If price pulled back and then your entry is right there, yeah, you'd have a sell stop right here just to trigger it. But you kind of have to take it by ear and see if that's a valid entry or not. The problem with applying the strategy right now, the original strategy, is that price is really choppy. And the thing is, the KT strategy is based on momentum. It's a trend continuation strategy. So if you're not going to find, it's going to be hard for you to find, some solid trends during these market conditions because price just keeps chopping around. Like as you can see right here, when you see all these wicks, price normally doesn't have this many wicks when it's indecisive to the direction. It looks like right here it was breaking into an uptrend. So right here you could have found a trend, but generally it's kind of hard for you to find a trend during these conditions. So I mean, yeah, clearly right here we had a trend for whatever reason, but if you look at the chart throughout the entire month of April, there's like literally no trend for you to trade off. You can see that the trends are very choppy; they don't really last that long. But if you go pretty far back to like January or even early March, you'll see that the trends have been more prevalent. Let's go farther back. So this is like mid-March. I think the market's started to get a little weirder around February. That was when the coronavirus started getting more well known. But you can see right here. So this is like late February. It's not March yet. You can see that there's a clear trend down here. It stays green for a pretty long time. And in this situation, you could have entered a lot of these trades that were valid entries. So yeah, in this situation, when the market's trending heavy, and then you have a retracement candle like this right here. So this is a prime example of what you're asking. So where did I see the spot? Yeah, so right here. So in this situation, you would have entered right here, but like you asked, if price was to pull back, a bearish candle, like it did right here, you'd put a buy stop right here, and then on this next candle, it would have filled it, and then shot pretty much into profit, so for about 70 pips. But yeah, I hope that helps answer your question. Also, I don't know if you watched the other videos, but we also have the K2 pullback strategy. So the way that strategy works is if you get a opposite signal. Yeah, Jackson, did you watch the pullback strategy? Because we also apply that too. I think that one applies more to your. Okay, cool. So I'll go over it real quick. So this is the K2 pullback strategy. The first, you're going to make sure that a signal is present, K2 signal, similar to the original strategy. And next, you want to make sure, instead of making sure that the trend meter matches, this time you want to make sure that the K2 trend meter does not match. Aaron, can you check the...
I'll check it right now. Excuse me. Let's see.
It's not matched. So the main difference is that it just doesn't match. So instead of it matching, you want it to be, red, green, or green and red. And then the other requirements are pretty much the same. Price not within 10, 15 pips from K2SR.
Look like DJ might be heading back down. If it closes, it might give up another sell signal.
Yeah, I mean, if he does that, I'm probably gonna re-enter.
Yeah, me too.
Yeah, but yeah, Jackson. So back to what I was saying. So first, you want to make sure there's a K2 signal present. Right here, we have a sell signal, which is red. Next, you just want to make sure that the K2 trend meter does not match. So if you have a red signal, the trend meter down here would be green. Vice versa, if the trend meter was red, then you'd be looking at green signals. So in that situation, once this happens, you're gonna make sure that price isn't within, I'm just gonna avoid this third requirement so I can go over this example. And lastly, you're gonna enter on the high of the signal candle. It's gonna be different depending if the high if you're taking a buy, or low if you're taking a sell. So pretty much all these requirements are met right here. There's a K2 signal present. The trend meter doesn't match. We're going to ignore the third requirement just so I can go over this example. And then you're going to enter on the high of the signal candle. So on this signal candle, the high is going to be right here. So let me go back and I'll just replay. I'll just take out the SR. So you're going to enter on the high of the signal candle. So right here, you're going to use the long tool. Enter a long position on the high. So as price swings back in your direction, you'll get filled. So right there, you would have been in the trade. And then, no, this is too close. So let me go back. Like the way I showed you guys before to set it, I forgot to zoom out. So you'll zoom out. So you'll get a full chart on there, and then you'll click the long tool. So this will give you a true range. There you go. So before it was only 40 pips, it was way too close. Now it's 85. And then you let it run. And there you go, hit profit target. And that's pretty much the K2 pullback strategy. It's the same exact strategy, it's just a different entry point. And then I have a couple other strategies that are taught in the course as well. We have the strategy that I've been using for all these signals this week. It's a brand new strategy using the K2 indicators. And it works perfectly with the current conditions we're in. So if you want to learn that, go ahead and watch that video. I just loaded it I think a couple days ago. But that's going to be called the K2SR. I forgot what it was. The K2SR trading strategy or something like that. Yeah, Jackson. This is actually, I like this more than the original. The reason why I don't teach this, normally is because a lot of people get confused off it. And I just try to keep things simple. But if you ran the same strategy throughout here, you can see like you have entered right here, and then you would have gotten triggered over here, or actually this is too far. So there's another requirement that's explained in the video. You don't want to let your trade run for that long without filling. So if it hasn't filled right here, so if it hasn't filled within like a couple hours, it's kind of obvious that you should take the trade off. So right here, it wouldn't have filled for like for 2 days. So obviously, I don't know, a normal person wouldn't let a trade be pending for that long because anything can happen at that point. But something like right here, if you entered this trade, you would have made 100 pips off that. It doesn't look like this would have triggered until way down here. Same with this one. This would have been a good entry, but actually it's only 10 hours. So if it's not more than a day, then it's kind of fine. But like a normal person wouldn't leave a trade pending for more than a day, especially not an intraday trade because you're anticipating to get in and out within that day. But yeah, if you take these two, they're both for about 100 pips. The same with that last entry that I showed you over here. Another 100 pips right there. Another entry right here. This strategy is actually a lot easier because the thing is you can just set it and then forget it for the day. But I do like to keep it simple, so that's why I have it where you just match colors and then you're good to go. But yeah, I don't really see any other questions in the chat. If you guys have any other questions, feel free to let me know. We've been on here for nearly 3 hours, so I'm probably gonna get off soon. But if you guys have any questions, at this very moment, feel free to let me know so I can go over anything you guys need help with. Otherwise, you guys can talk to me on the Telegram or through email, whichever's easier for you. I'm gonna go through the signals. Hey, Aaron, you went through the signals, right?
So yeah, none of them was valid.
Just TJ.
Yeah, CJ.
No, you're talking about GJ, right?
Oh yeah. Oh, yeah, that one had went away. Still playing games.
Man, I'm gonna figure out what's wrong with my computer. I might just have to reinstall Zoom. I think that's the problem. When it updated, it probably screwed it up.
Yeah, probably. Is it lagging?
Yeah, it's lagging like crazy, man. It's making it so hard for me to chart when I'm on here. So yeah, it looks like DJ's. It looks like it's coming back down though.
Yeah, it should, man. Hopefully, just Asian session is normally like a consolidation period, so it's just consolidating right now before it continues the overall trend, and it did break that zone. So
Oh yeah,
I still see it going down.
It played out exactly how I drew it right here. It
Exactly.
projected off that zone, so it's gonna come back down.
Mm-hmm.
The only problem is it's gonna have to fight through this other zone.
Oh yeah, true.
But I think once it has like some momentum, it's just gonna shoot through like it did right here.
Exactly.
So yeah, you guys are still.
It might drop even harder. It might drop even harder too. So that's gonna be one roller coaster ride.
Yeah, I mean, there's some news coming up, man. Like in a couple hours. So in about 3 hours, there's some news. So I don't know. We'll have to wait for that. GC said, "How do you guys feel about GC?" So I'm pulling GC real quick. I think it'll come back down because so the reasoning for that is right here was a valid sell entry for this trade. Oh, actually, let me measure it because if it's reached 10 pips, then it's long gone. But no, it hasn't. So yeah, this would be considered a sell entry for the K2SR strategy. So it plays right there. Personally, I don't like GC because they're both Euro pairs, and Euro pairs usually don't move pretty smoothly. So it's going to be a bit of an issue finding some real direction because once it goes into consolidation, it usually stays in there for some time. Like you can see here, price barely moves until it finally breaks out of consolidation. It looks like price dropped right here, but the main problem with this is that it might just go back into some consolidation right here before it determines its direction. So you can see right there, price was in consolidation right here until it finally broke through. And yeah, the thing with GC, unless there's some other catalyst that's really pushing the market in a certain direction, it generally is going to be stuck in a consolidation phase. Like right here was a heavy news week. You can see there's a ton of news down here. That's why there's a lot of movement right here. See, there's news like literally every day. There's also a lot of news right here, and that's why there's this movement. So there might be some movement down here. But what I would do is I would wait for price to break, this consolidation zone. And then once it decides a direction, then I would take it. So you can see here price was going down, and then it consolidated. And then once it drops a certain amount, then it usually continues in that direction. Like right here, price was going down, it shot up this way, retraced just a little bit, and then it went back in that direction. Generally, when it finds a direction to move in, it usually continues in that direction. It's the same with all pairs. It's not just this pair, but pretty much whenever breaks out of consolidation. But yeah, I would wait until price breaks out of the zone right here. Let me see how big is it. It's actually a pretty big zone. It's 89 pips. Yeah, if you're trading like if you're trading these, it's only certain pairs. It's like GC. It's the pairs that are very, very similar as to their worth. So you can see here, 1 pound is worth 1.19 Swiss franc. It's pretty close compared to, let's see, something like GN. So 1 pound for GN is going to be worth 2.05 New Zealand dollars. And that's why there's a lot of volatility between these two pairs. I'm going to try to find another pair that's kind of like Euro GBP. If you ever follow Euro GBP, the worth is so near that there's not very much volatility with this pair. This is why I almost never trade this pair, because you'll barely get any movement out of this. You can see like price gradually increases, but when it's not trending, it's in consolidation for like ever. It's literally in consolidation the whole time and doesn't really move very much. And if you look at how much it moves, it only moves like 20 pips for the entire day. Oh god, it's like 4 days. It's only 23 pips. It's kind of pointless to trade this, unless you're gonna go like super heavy lot size. If you're gonna go like 20 lots, then okay, then it would make sense. But otherwise, it just doesn't make sense. Like this is 4 or 5 days, 5 days, and it's only moved like 40 pips. It's kind of like you're just watching. You're watching nothing literally, unless you find an area where it's trending up like it is right here. But the reason why it trended up right here was I think this was when there was a lot of heavy news, March 5th. And I think this was when, I don't know if it was when they were deciding Brexit or whatever, but I know during March and like February, there was a lot of stuff going on with the GBP. And that's what caused this movement. But as you can see here, it went straight into consolidation. There was no news happening around this area. And if you're to, map out how much it moved here, like in 4 days, it only moved 50 pips. It's like barely anything. And then there's a random push up here because there was heavy news. So I mean, personally, I don't like trading this pair. I know a lot of people do if they're just going heavy lot sizes and scalping for the most part. I mean, yeah, that would make sense in that situation. But Euro CHF, GBP CHF, and Euro GBP, I don't like trading them because they're very indecisive. You can see here, there's a ton of wicks. And when these wicks are present, it shows a lot of indecisiveness in price. So if you're comparing, this pair, ton of wicks because it's pushing up and down both directions, you compare that to something like EU. See, there's not as many wicks. I mean, there's wicks, but they're not as long. Like you can see that direction has been decided. You know, pushes up. There's a lot of bullish candles, but there's no heavy wicks. Like on the other pair, you can see there's a ton of wicks on every single pair, and that provides for, you know, ability to manipulate market. Because if you have your stop loss there, they'll spike it and stop you out, and that's why I try to avoid certain pairs. But yeah, guys, if you guys have any other questions, I don't really see anything else in the chat. So I'm probably gonna get off. I've been on for about 3 hours, so I'm gonna go grab dinner real quick. But yeah, if you guys have any questions, feel free to hit me up in the Telegram, and then I'll get back to you as soon as I get back. Otherwise, I'll catch you guys a little later. All right, hey Aaron, are you gonna are you looking at anything right now? I just want to make sure before I head out. Oh, Aaron's not even in here. He left. All right, guys, so I'm gonna head out. I'll talk to you guys later.
K2, yeah, we headed for the top now. K2, yeah, we call it when it drop down.